All right. What's up, traders? What's up, tycoons? Super excited for today's video. Coming at you guys with a viewer request. We're going to take a look at LABU, LABD, and we're also going to take a look at XBI. If you're unfamiliar with these are some of the biotech ETFs available to trade in the market. And LABU and LABD are going to be some of the leveraged ETFs, right? So we're going to break all of these down. We're going to go over the daily structure on LabU. Now, I actually think I pretty much made this in my last video, and you can see we're actually doing very well of respecting that demand zone. We broke out above the supply zone, and we're battling our major resistance levels right now currently, okay? We'll also zoom in a little bit more and further explain some of the strategies that I'm using. All right, and markets tend to move in 5-wave and 3-wave structures. 3-wave structures are what's known as corrective waves, right? So you have an impulsive wave, and then you get a correction, and then possibly you get a continuation of that impulse. That would be trend continuation, right? We'll go over those possible scenarios. We're also going to take a look at LabD. There was a big head and shoulders here. We're going to look at the weekly chart setup on LabD because it is getting a little bit bullish. Now, this is the bearish ETF, the bearish leverage ETF of the biotech sector. So if this is getting bullish, maybe it's a signal that LabU and XBI could be topping out. So you want to pay attention to all sides of the story, not just one side, right? And this thing actually made all-time lows here recently when it comes to LabD. Now, here we have XBI, which is just the regular biotech ETF sector in the S&P 500. And we can see it's a little bit stronger than LabU was, right? So we're going to break down all of these, explain things for you guys really well. So make sure to smash that like button and subscribe to the channel if you guys are new. Before we move any further, all right, the content provided in this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Myself and any individuals on this YouTube channel are not registered financial advisors or brokers. Trading in stocks, bonds, commodities, and crypto involve a significant risk of loss and is not suitable for all investors. Be sure to read through the full disclaimer before moving forward, and we'll go ahead and jump right into the video. So we're going to talk about LabU here and go over the daily structure that we had, right? Zoomed out a little bit, looking at the bigger picture. We had this former demand zone here, right? And this was an area of demand where price kept pushing higher each time we came down into this zone, right? We kept seeing pushes higher. Eventually, we came down and broke through that level, right? And so what happens is old demand becomes, prior demand becomes new supply, and old supply becomes new demand, right? And so we see here that we did end up coming down and testing this previous demand zone that we had, all right, and we actually found support, and we've had a pretty nice rally, okay, up to our major resistance levels above our overhead supply zone, right? So now this supply zone, if you think about it, is going to change back into demand, right? We're going to look for this now to be an area of demand. We'll zoom in on the next chart and go over things. But one thing I quickly want to explain is why these three levels right here are major resistance, right? At $7.57, $7, and $6.43. Well, the reason being is because these are the three most common and well-respected Fibonacci retracement levels. Now, yes, there are more Fibonacci levels and there are other Fibonacci levels, but these are the three most common and well respected. And you use these to identify trend continuation versus reversals because nothing moves in a straight line down or in a straight line up. Rather, you get a move down, a retracement, and then a continuation of that trend, right? Or a move up, retracement, continuation of that trend. Or you can potentially spot reversals, right? If you move down, retrace, and you start to consolidate and break through those retracement levels, you can spot a potential upside reversal, right? And the same thing with the downside. If you move up, retrace, consolidate, and break through those retracement levels, you can spot a potential downside reversal. So we're taking our most recent swing high that we had, and we had a very strong move to the downside, a very impulsive move. And look at what we've done. We've had a healthy retracement, right? All the way up to 757 on LabU is healthy retracement territory. And if we reject these levels, okay, there is the chance that we could get trend continuation and possibly retest our demand zone or hit some of the bearish price targets here at 371. So, for right now, all right, this is a time when you want to be patient, right? If you're trying to go long in LabU, you need to have some patience at the moment. And really the reason being, okay, we're about to zoom in so things will be a little bit more clear, is you don't want to get trapped, going long at the major resistance levels, right? Technically, what you would rather look for is a breakout of the major resistance levels and then a retest as confirmation that we could potentially head higher, get that reversal, and retest some of our previous highs at the breakout level. And, if we break through there, possibly even hit the bullish price targets. Now, one thing you must keep in mind, all right, in my opinion, biotech is the most risk on asset class in, basically in sector in the stock market, right? And so we have seen a very strong, risk on market here lately, but will that trend continue, right? Do you really think that the market is going to continue with such a risk on aspect and risk on trading mindset, right? That's a question you need to ask yourself. If you think yes, like, oh, hey, I think the Fed's about to pivot. I think that the market is about to go full risk on, and we're going to see the risk on asset classes really explode, then maybe you want to go long, right? But if you don't think that's the case, maybe, you want to, be a little bit cautious and look for a better entry, maybe look for a good trading signal, something like that. Okay. Now let's go ahead and zoom in real quick. And I mentioned those major Fibonacci levels, and I talked about markets moving in 3-wave and 5-wave structures. Okay. So here we had a very clear 1, 2, 3, 4, 5 down into our demand zone. Okay. And typically you get an ABC correction, right? And so that would be 3 waves, right? So we have a 1, 2, 3, 4, 5, and then we got a 1, 2, 3 up to the major retracement level. So we had a 3-wave retracement, guys. So it's looking like a very corrective wave, but I don't want to count the bulls out of the way. All right. And the reason being is because the bulls still have chance to push this higher, right? They can turn this into a 5-wave structure, right? And if they do so, they need to hold above 646, 621, and 595, right? Those are the 3 major retracement levels, okay? On a smaller scale, right? So we're looking at the larger retracement of the impulsive move to the downside. We see we're in healthy retracement territory, but look what happened when we did our wave 1 up here. We came down, we retraced to the 50% retracement level, we pushed up higher, and now we're retracing again. And on the smaller scale, right, from the wave 2 to up to wave 3, we've already bounced at the 646 level and pushed and closed up higher on the daily chart. All right. Now we talked about former supply becoming new demand again, right? So technically what we're looking for on a 5-wave structure aligns perfectly with the break and retest of, sorry about that, with a break and retest of supply, right? So we're breaking out above the supply zone, and we're going to try to retest this and form it into new demand and then push up higher, right? That would be the goal that we're ultimately looking for if you're going to be bullish on LABU, right? That's what you want to pay attention to. And those are the 3 major levels, right? If we end up, coming down, breaking through these levels, there's a good chance that we end up getting a reversal and retesting the $5 to $5.39 region, potentially even coming back down lower to the demand zone here as well, right? That's going to be the possible scenario if we move up, retrace, consolidate, and break through there. Okay, so that's what you want to pay attention to when it comes to LABU. Now let's look at LABD. This is our weekly time frame, actually. So this is a larger, or I'm sorry, this is the daily chart. What we had right here was a very simple head and shoulders pattern, and it played out very perfectly. Okay, we ended up getting a left shoulder over here. Then we got a right shoulder, and we got the head, left shoulder, right shoulder. All right. And what we did was we actually broke the trend line here, or the neckline, you could call it. You could draw the neckline like this. You could draw the neckline like this. Either way, we ended up breaking through that neckline there, and we saw the full move down to where the pattern should go, taking you down to the bottom of where the structure began for the head and shoulders, right? So, from a technical analysis standpoint, the strong move down in LABD made a lot of sense, right? And this is the bearish ETF, right? So, if you're seeing this go down, it means that, biotech is going up essentially, right? Now, when we look at the weekly setup, we just made all-time lows here recently, okay? This was all-time lows at this point, and there's something known as bullish divergence forming right now. Now, bullish divergence, if you're not familiar with the term, I'm going to explain it to you guys really simply and really quickly. Take a look how we have a low and then a lower low right here, right? So, clearly the price of this, stock is in a downtrend making lower lows. But when we look at the relative strength index, the RSI, remember, this is going to measure the relative strength of something at its given prices, right? And so oftentimes it should be correlating to what the stock price is doing. But here we see a low, and then we actually see a slightly higher low over here. So we're actually increasing in relative strength, building relative strength as the price is going lower. And sure enough, what happens is we got a very strong move to the upside. but look at where we got rejected on the weekly time frame, right? The weekly candle closed exactly at our 61.8% retracement level, which is 2272, right? So we have the move down, retracement, and then possibly continuation lower if we break this demand zone here on LABD. But there's a chance that that may not happen, all right, because we're in this demand zone here, right, that we created over here and as well as over here in the past. And we have this bullish divergence trend line here, and take a look at where we're at here currently. We are testing that trend line. So there's a couple different ways that this can go, obviously, right? We could potentially bounce off of here. And if we look at that weekly candlestick close right here, this is a doji candlestick, right? This is an indecision candlestick, potentially a reversal candlestick, right? Now, there's no guarantees, but what we're seeing is that we have the bullish divergence. And if we do end up getting some type of a pop, we would understand it from a technical analysis standpoint. But if we end up breaking through here, okay, and breaking through this bullish divergence trend line, there's a strong chance that we come down to the 894 region on LABD, right? And that would be more bullish for biotech in the biotech sector, right? And so we would look for LABU to follow the bullish analysis that we have, and we would look for LABD to follow the bearish analysis that we have, essentially breaking through this weekly bullish divergence right here. But oftentimes, these are really good trading signals, right, that I like to use to help give me an edge. And I also like to combine it with a MACD. So take a look how first we get the bounce off of the bullish divergence. We create this bullish divergence, and we see the red line go above this yellow line here, okay? When that happens, that's typically known as an entry signal, right? And so we get bullish divergence number 1 right here, and then we get the MACD entry signal number 2 right here, and we saw a strong push up from the $12.50 region all the way up to $22.72. That's a big gain, guys. That's a big gain right there. And then we saw a pullback. Okay, we rejected the major retracement level. We weren't able to break out, retest, and continue pushing up higher, retest the previous lows, and we ended up, heading back down. All right. Now, if we look at the MACD right now, it's very close to curling back down to the downside. So if we break this trend line here and the MACD curls down to the downside, that could be an exit signal that we're heading down towards that 894, potentially even lower on the price levels for LABD, okay? But if this thing ends up curling back to the upside, that could be another bullish signal, right? So, use a couple of these things like the MACD and the RSI in conjunction with each other to help give you an edge and help give you more confidence, right? If we see a strong bounce off the bullish divergence trend line and we see a strong curl up on the MACD weekly chart, then, that could be a long signal, right? And if this thing gives a strong sell signal and we break through the bullish divergence trend line, then you could most likely, plan on heading down to some of those bearish price targets, okay? Now, let's go ahead and take a look at XBI. All right. The last time I did a video on these, I also charted up XBI, and XBI is looking very similar. Okay. Now, what's very interesting is that XBI is a little bit more bullish than the leveraged bullish ETF. Okay. If you take a look, we actually broke out above our major retracement levels here, and look at exactly where we closed right there at that 5.49 level. Okay. So, we ended up closing right in between there, right around those levels. And it's looking like we potentially could be getting a 1, 2, 3, 4, 5, right, guys? Up to our breakout level of 92.62. Now, if we fail to stay above 85.49 and we start flipping that to resistance from support and heading back lower, that's going to be a little bit of a bearish signal. And the reason being is because we would end up getting a look above right here and fail. Okay. And the reason a look above and fail is significant is because really this is the time for bulls to go, really prove that they're in the market, that they're in control of the price action right now, and really take advantage of the opportunity for a breakout and retest of our major retracement levels and push higher. If they look above and fail and we break through our levels, it's going to be a bearish signal because sellers are the ones who are actually in control. And the reason you know that and you see that is because bulls and buyers had a chance to really step in and show demand and show that they were in control of the price action. And when given the opportunity, they failed at that opportunity and we actually pushed lower. Take a look here, how we had the demand zone, we had the supply zone. We mentioned on LabU how we're looking for a breakout retest of the supply zone. It's exactly textbook, guys. We got a breakout here. We retested the supply zone and we pushed up higher above our major resistance levels. If we can do the same thing where we push out higher and then flip our major resistance to support from resistance, then we can potentially look for the next move up. Okay, so hopefully you enjoyed this video. All right, I tried to give you guys a good analysis. I try to remain unbiased, all right, and give you guys some of the bullish and bearish scenarios. That way you guys can actually be properly prepared, right? I don't want to be on YouTube just trying to tell everybody, hey, go long this, and you're just going to go up, and then all of a sudden things start reversing. I want you to start learning how to use some of these strategies and be able to apply them and use them yourself. That way you can work on giving yourself an edge in the market and trying to increase your odds of success. Remember, trading is like going to battle. It's like going to war. All right, and your money is your soldiers. Okay, those are your soldiers. So you want your soldiers to be properly trained, properly equipped with the best weapons and the best gear to increase their odds of success. And that's what some of these strategies and some of these indicators that we're using are going to be for your soldiers, right? These are going to be the weapons and the equipment that your army of soldiers, your soldiers, your army of soldiers, your money, remember, can use to increase their odds of success on the battlefield that is known as trading. So smash that like button, subscribe to the channel if you guys are new. Remember, I do these viewer requests every week. So if you want to see your stock, your sector, your cryptocurrency, your commodity, anything like that in the next video, just comment down below and I'll try to get to it as soon as I can.